You know, I'm sitting here in Melbourne, sweating through this endless summer heat wave, fan blasting full tilt, and my phone's buzzing non-stop with crypto alerts that are hotter than the asphalt outside. With ASIC dropping bombshells on regulatory risks and Bitcoin ETFs pulling in billions globally, is 2026 the year crypto finally goes mainstream, down under, or are we in for a more turbulent sort of thing? Buckle up because we're unpacking it all today. All right, let's kick things off close to home. Here in Australia, the corporate watchdog ASIC has just flagged regulatory gaps in the crypto space as one of their top risks in 2026. In their latest Key Issues Outlook report and corporate plan released this month, they're sounding the alarm on rapid innovation outpacing oversight. We're talking about emerging digital assets like tokenized products and DeFi services that aren't fully covered under current laws. ASIC's chair even called 2026 a decisive year for tech policy with potential updates to digital platform rules and AI integration in finance. This builds on last year's momentum. Remember ASIC's October 2025 guidance that clarified how digital assets fit into existing financial services regs. Now, they're pushing for reforms to close those gaps, aiming to protect consumers from scams and volatility while fostering innovation. For us Aussies, this could mean stricter licensing for crypto custodians and exchanges, better transparency on risks, and maybe even tax incentives for blockchain startups. And get this, with crypto adoption hitting around 32% of Australians owning some form of digital assets, up from 28% in 2024, these changes are timely. Bitcoin remains the top hold at 75% of portfolios, but altcoins and NFTs are gaining traction, especially in tech-savvy spots like Melbourne, where events like Blockchain Week draw crowds. But, as I've said it before, it's not all smooth sailing. Industry voices are calling this the training phase for crypto firms, as heavier regs could squeeze out smaller players if not balanced right. On the flip side, these reforms are being hailed as a strategic window for institutional entry. Think big banks and funds setting up shop here, attracted by clearer rules in the Asia Pacific region. If implemented well, we could see Melbourne evolve into a real blockchain powerhouse with more jobs in fintech and increased local investment flows. I've got this new mic that I'm trying to use as well, so hopefully sounds good. So we'll continue on. What does this mean for you as an investor? More security for your holdings, but potentially higher compliance costs passed on. So stay vigilant on how these bills progress through Parliament. This segment is brought to you by CRYPTOLOGIC.com.au, your go-to hub for in-depth Aussie and global crypto news. Shifting gears to the global stage now, where the action is electric. First up, Bitcoin ETF Inflows are roaring back after a shaky end to 2025. In just the early weeks of 2026, US spot Bitcoin ETFs have raked in over $1.7 billion in net inflows, reversing December's outflows amid market dips. BlackRock's IBIT led the charge with massive daily hauls. 1 week alone saw 385.9 million net positive. And assets under management for all Bitcoin ETFs now top 117 billion despite some turbulence. This is institutional money talking, folks. Hedge funds and pensions buying the dip as Bitcoin stabilizes. Second big story, Wall Street's deepest dive yet into crypto. Banks that once fought Bitcoin are now building on it. Morgan Stanley filed for spot Bitcoin and Solana ETFs, JP Morgan's expanding custody services, and even US Bank is jumping in. This institutional dam breaking signals a regime shift. 2026 is shaping up as the year traditional finance fully embraces blockchain. Analysts predict this could drive structural demand, absorbing more BTC supply than miners produce, pushing prices higher long term. Third, the explosion in stablecoins and tokenization. Experts forecast the stablecoin market hitting $1 trillion by year end, fueled by real world asset RWA tokenization. Think tokenized bonds, real estate, and even art on the blockchain. Firms like FM Investments are filing ETFs for tokenized assets, and leaders like Algorand's CEO are predicting massive growth here. This isn't just hype. It's about efficiency, faster settlements, lower costs, and broader access for everyday investors. But watch for quantum security risks. As tech advances, crypto protocols are beefing up against future threats. Now, for that in-depth market analysis you've been waiting for, here it comes. Bitcoin's currently trading at 127,398 Australian dollars AUD or 87,775 USD, down slightly 0.13% in the last 24 hours, but up from recent lows. We're seeing a classic post-halving consolidation phase, with the 2024 halving still echoing through supply dynamics. Technically, BTC is holding above key support at 120,000 AUD, that's 78,000 USD, with resistance around 140 AUD, 91,000 USD. If ETF inflows sustain at this 400 million plus monthly clip, we could test all-time highs by mid-2026. Analysts from 21 Shares predict a steady evolution for Bitcoin, driven by the ETP flywheel where more products attract more capital. On the macro side, global uncertainty, think interest rate cuts, geopolitical tensions, is making Bitcoin a hedge again, much like gold. Altcoins are mixed. Ethereum's eyeing $10,000 plus if layer 2 scaling delivers. Solana's dominating DeFi with speed, but XRP's dipped 20% amid ETF hype fizzling. For Aussies, factor in our dollar strength. A weakening AUD could amplify gains in crypto holdings. Risks? Volatility from regulatory whiplash or quantum breakthroughs But opportunities abound in tokenized assets where Australia's stable reg environment could shine. Diversify smartly. 60% BTC, 30% ETH or SOL, 10% stables for balance. All right. Need a breather after all that. Here's today's crypto chuckle. Why did a crypto trader bring a ladder to the exchange in Melbourne? Because he heard the market was hitting new heights during this heat wave, but wanted to climb out before the next dip scorched him. Okay, seriously now. It's time for the CRYPTOLOGIC Takeaway. Synthesizing this, ASIC's focus on reg gaps is a wake-up call, but its positive, clearer rules mean safer investing and more institutional cash flowing into Australia, potentially boosting local adoption beyond 32%. Globally, those 1.7 billion ETF inflows and bank entries scream confidence. Bitcoin at 127,398 AUD, 87,775 USD is poised for growth if trends hold, with stablecoins and tokenization as the next big waves. But remember, I'm not a financial advisor. This is my expert breakdown based on data. Always Dior, assess your risk tolerance and never invest what you can't lose. For 2026, stay diversified, watch for quantum-proof tech, and position for RWA booms. What are your thoughts? Will these regs supercharge Aussie crypto, or is it too little too late? Drop comments below, like if this deep dive hit home, subscribe for more CRYPTOLOGIC insights, and hit the bell for notifications. Check out cryptologic.com.au for articles expanding on this. Until next time, stay cool in this heat. This is Sash from CryptoLogic signing off from a sweltering Melbourne. Peace. Catch ya in the blockchain.